Hi guys, good afternoon and welcome to Money Control. I'm Karunya. With me is Manisha Gupta and all eyes on natural rubber prices. Just a few days ago we spoke about how they've corrected and now they've corrected further, 16-month lows, right?
Yes.
What has changed?
So, this is a peak supply season, by the way, and we've seen good rains actually in Kerala. It was delayed in Kerala, so the harvest or the tapping has been slightly delayed as well. And this is the time that you have the supplies coming into the market. Vis-a-vis that, you do not have very strong demand for the automobiles. And it's not just the Indian phenomena, but outside as well, especially with the Chinese COVID lockdowns, the kind of restrictions we've seen there, the demand there as well has been on the weaker side. So replacement demand has been around there, but with the kind of on season that we are in and the weak demand, that clearly seems to be weighing onto the prices. So yes, a 16-month lows and just about 148 to 150 rupees per kg is how the natural rubber prices are trading.
And just last week, because of the correction in rubber prices and crude oil, Tyre company stocks were on a tear. And is this more good news for them?
It clearly is, yes. And if you look at on a month-on-month basis as well, in July we were trading at 170 per kg for rubber. Last month was 160 per kg. This month is 150 per kg. So while yes, it's a good news for tyre companies and replacements, but it definitely is not good news for the rubber producers. Let me tell you, the all-time high for rubber prices in 2011 was 240 rupees per kg. From there, we're trading almost at the half prices of these, while the cost of production, labor and etc. everything has gone up. So it's not a very sustainable model when you look at the rubber prices right now. But the only hope that lies is in the fact that the last quarter, which is the festival quarter, October onwards, around Diwali, people do start buying automobiles. And we are looking at China also uplifting some COVID restrictions. So that could be perhaps a good news.
Okay, but what about traders? Are they still slightly cautious about this commodity?
They are, because we've hit 148 and that has been the low for this year, the lowest in 16 months, as we've been saying. 145, there have been some reports of 140 as well, but yes, that is making markets very jittery right now. And the expectation is that yes, September is a weaker month, but October onwards, when we do see those bookings coming in, buyings for automobiles coming in, the market does get cheerful in some sense, barring if any unforeseen circumstances, uncertainty, depending on what kind of an interest rate hike do we get, what kind of economic data is forthcoming from China, US and Asia. I think apart from that, there should be some support now coming for prices.
And how much of an excessive inventory of supply are we looking at?
So there's never an excess in Indian markets because we do intend to import whatever we produce does get consumed into the Indian markets. We do export some rubber, tires, yes, but for the rubber, the industry completely takes it, and whatever the gap is remaining, we tend to import that as well. But whatever we have right now will get consumed. The only reason that we're talking about a surplus is that the demand hasn't been so strong. But once that starts picking up on a capacity, we will see demand.
Here's hoping it will, and of course the festive season could be a big trigger for these traders and producers of natural rubber. All right, on that note, we're going to wrap it up for today. Thank you for tuning in.